Now this brings us to the weighted average method. So this is another inventory costing method that is an assumption method that is used to calculate the cost of goods sold and value the inventory account. So as you can see here, this is the same scenario that is used when determining the cost of goods sold and also valuing the inventory balance under the FIFO and LIFO method. Okay, this doesn't change when it comes to the 3,800 units that's in a company's inventory account for $22,200. 2,500 units were sold out of those 3,800 units for $35,000 in revenue. Revenue amount doesn't change at all, but what does change, like I said in the previous video or the video in the FIFO and the LIFO method, is the cost of goods sold that's recorded in the company's books and the inventory balance as well. Those two amounts do change. So under the weighted average method, I like to break it down step by step. So when it comes to the weighted average method, it's in the name, weighted average. So you pretty much are going to take the average cost per unit, and you're going to take that and associate that with the units that were sold to get your cost of goods sold that needs to be recorded as an expense in the company's books. So step one, you have to figure out what the average cost per unit is going to be. And that's you're taking the cost of goods available for sale, which is $22,200. That comes from right here, $22,200, and divided by the 3,800 units that's available for sale, that's currently sitting in the company's store or the company's warehouse. This is the number of units that's available for customers to buy. And the 3,800 units is right here. So to get your average cost per unit, I just rounded it to the nearest 2 decimal points. And when you take 22,200 divided by 3,800, that should give you $5.84. So that's the average cost per unit, and that is step one. You need that before you can move on to step two. Step two, you're going to take the $5.84 average cost per unit. You're going to multiply it by the number of units that were sold. So the number of units that were sold is 2,500, and that's going to give us $14,600. That's going to be recorded as the cost of goods sold in that expense account. Then step three, you got to figure out what the inventory balance is going to be. Simply put, you're going to take the 3,800 units that were available right here, subtract out the 2,500 units that were sold. That gives you 1,300 units remaining in inventory, which is no different than using the other inventory costing methods. You want to have 1,300 units remaining because out of 3,800 units available, you sold 2,500. Now you're going to take those 1,300 units remaining, and you're going to multiply it by that average cost per unit that you determined in step one to get $7,592 as the ending inventory balance.